Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Monday, the 24th of March, Bull versus Bear webinar. Steve Miley here on the call for trade day. Welcome, everyone. Can I just get a yes from someone if you can just hear me? So I've switched over my microphone in here today to make sure that I'm actually being heard. So get a yes if you can, if you are live and watching right now. So give me a yes if you can, just so you can hear me. So yeah, we're going to go for our usual run through in here, but slightly different for a Monday, as we do every Monday in here. Take a look at the bigger picture for the week, to seeing what we've had, what are the major influences from the last week, what are we carrying into this week, where are the potential volatility points as we go into the week. I'm going to reference in here these two macro documents that we put in every weekend, the macro matters and the macro summary, just obviously the summarized shorter versions of the longer macro matters document. So yeah, let's just run through this. And we'll see where we go. So US stocks ended up last week. First up week for a few weeks in here. It's been a slide lower over the last few weeks in here as various geopolitical concerns, particularly around tariffs, about slowdown, about recessionary pressures, have all been influencing financial markets in the negative way for the stock markets. And seen stocks slide significantly lower. However, notable rebounds last week. The Dow up 1.2%, S&P up just 0.5%, and the Nasdaq only 0.2%, but not going any lower and rebounding. And we saw European and Japanese markets also higher. The Fed last week left rates unchanged as fully expected. They did highlight uncertainty, particularly around inflation, but also signaling caution with two rate cuts expected in 2025 and long-term commitment to balancing growth, employment, and price stability. So, yeah, Fed, facing a tough task of potential inflationary pressures coming down the line from the tariffs, but also a potential slowdown, consumer confidence data signaling potential slowdown and potentially recessionary pressures coming through. On the other geopolitical side, so that a lot of that's been driven by the tariffs. On the other side, we've got talks of a limited Ukraine-Russia ceasefire gaining momentum over the past week, and we've got some more on that from today. Also, some more on tariffs influencing markets right now. This coming week, the major focal points are going to be the global flash PMI data we have today, coming from S&P Global. And then on Friday, we get the US PCE. It was Thursday and Friday, the US PCE inflation. The more important data is on the Friday. Nothing of note out of central banks. Japanese monetary policy meeting minutes on Tuesday. Going to carry on watching Fed speakers as ever. And as I said in here, the main data in here this week, the global flash PMI that we get today. We've already had that out of Asia and Europe, waiting for that on the US. We do get US consumer confidence as well tomorrow. That's going to be important for Tuesday. Light on the US side, US durable goods orders coming through on Wednesday. US GDP and PCE. GDP rarely makes a significant impact. And this is the quarter-on-quarter PCE number. The more important data is this here, the US PCE year-on-year, month-on-month data. We're so going to be certainly watching out for those on Friday. So really, we're watching global flash PMI today, US consumer confidence on Tuesday, and that US PCE year-on-year, month-on-month data coming up on Friday. So those are the main focal points going forward. As you can see, we've had data out of Europe in here this morning, the HCOB/S&P Global data for Europe. So as you can see in here, France, mostly Germany, mostly Eurozone, and mostly UK, better than expected. Some worse, only slightly worse in places. Remember, this is the preliminary flash PMI data. We don't get this from the in the US from the oh gosh, I'm losing my train of thought here. We get it from S&P Global, right? We don't get the ISM data. So the ISM data is usually the more important of the data. But with the ISM do not do the flash, the early data. Remember, this is the data for March coming out in March after 3 weeks of March. So we get this flash PMI in here at 9:45 today. So flash PMI from the US. That's going to be the main focal point today. We also get Fed Vice Chair for Supervision Barr speaking later today at 15:10. So 9:45, the flash PMI data from the US. And then Barr speaking at 3:10 this afternoon. As we said in the Eurozone economy looking positive in here with that data. Eurozone economy growth accelerates 7-month high in March as measured by the PMI. So that was a positive, taking European stock indices higher in here today. And then in here, looking at the morning briefing, this is the morning briefing Europe. I didn't see, let me just go back and refresh, see if I can get the morning briefing, US in here. Okay, here's morning briefings. America's out now. The main feature here is Trump's tariffs. Next tariffs may be more targeted than thought, and the market's taking a reciprocal tariffs may be more targeted than initially anticipated. So that's being taken as a positive in here. Certainly going into today. With European and futures markets up high. European futures being helped high also by that PMI data. So that's certainly a positive in here going into today. And also we've had some slight positives coming out of talks in here in Saudi Arabia, not actually directly between Russia and Ukraine, but bilateral talks in here between US and Ukraine, I think, in US and Russia in here. So, Trump's plans his tariff liberation day with more targeted push. Markets are taking this as a positive, coming away with what points to be more targeted than the barrage he occasionally threatened. So that's being taken to positive. And tariff exclusion hopes prop up markets. So markets rebound on that. And the other thing was Ukraine, US hold talks in Riyadh in bid for broad ceasefire, and some positive soundings coming out of that as well in here from this morning. US futures rally as traders dive back into tech. The tech up in here on the pre-markets in here this morning, and on hopes on that more targeted tariffs, and on hopes from the in easing of geopolitical tensions with respect to those talks with Ukraine in here. Futures buoyant ahead of data-driven week. We've already run through all that data that we've got coming up. US futures jump on hopes of measured tariffs, so we covered that. And you can see in here, the Hang saying up at nearly 9/10. The Nikkei was actually down 2/10 this morning, but European exchanges notably higher. Only a couple of tenths on the FTSE, but up 6/10 on the DAX and 1/3% on the French CAC. And if we go to the US futures in here, notably higher. The Nasdaq up 1.3, leading the way higher this morning. S&P also up more than 1%. Turning our attention to the interest rate markets in here. So you can see in here, no real expectation, only 11% chance of a rate cut in May, but now the market very much now expecting a rate cut in June. Only a 25% rates are where they are now in June. So the rate cut, 75% chance we get a rate cut in June. And if you jump to the end of the year in here now, 10th of December, what we're seeing here. So here's unchanged, one rate cut, 2 This is the best, the market now pricing in 3 rate cuts, potentially 3 rate cuts. 2 to 3 rate cuts is what's being priced in now by the end of the year. So certainly hopes of a 3rd rate cut. Fed basically on the Fed dot plot chart, remember from last week, telling us 2 rate cuts by the end of the year, but markets hoping out for 3 rate cuts in here. On the longer end in here of the interest rate market, you see yields ticking higher in here more recently. And if we can get above here, 4.35% on the 10-year, would signal like a yield base. That would then point to higher yields, lower prices. And actually in this scenario in here at the moment, I think higher yields would actually be a slight positive for stocks in here at the moment, indicating some trust in the market. On the US fixed income side, though, we remain in here bullish on price. So bullish on price is looking for lower yields in here at the moment, but we could shift that. You can see in there that trend line, the market breaking down through this trend line on the 30-year. If we get a breakdown through these recent lows in here on the 10-year note, which is the equivalent level in here of that peak there. So that's that recent high of 435 yield is the equivalent to the recent lows in here at 110.12.5. We go below 110.12.5 in here on the June contracts and the 10-year would signal a potential top in price, and then downward pressures in here would be seen as a positive. Bonds are up as a safe haven, so sell off in bonds could potentially be seen as a positive for stocks in here. So watching those levels. We did turn positive last week on stocks in here. Still tentative basing pattern in here. Still bullish on both June and the June contracts on Nasdaq and the S&P. Remember, we're now on the June contracts. These looks like mini bases that have gone in, and obviously we had a decent rebound on Friday, but really, if we go to the day's chart, it's going to be where it's more interesting if we go to the daily. So you can see, even with the rebound on Friday, we had that really strong. We got a gap this morning and breaking above those peaks already from last week. So really strong move, bull gap, and then pushing higher. And you remember last week, I was talking about this 13-period EMA. Look, we flirted with it Wednesday, Thursday in here, sold off and rebounded on Friday, gap high this morning through that 13-period EMA. That looks really bullish in here. And if we go to the 30-minute chart, you can see the market last week also flirting with this down trend line that comes all the way in here from the back end of February. And this morning in here, gapping up through it and above the peaks in here from last week. So this looks really bullish. If we can hold on to that gap today, it looks really bullish for the next few days in here. Maybe seeing a short squeeze. Some of the shorts in here that we're seeing from February, March, over the last week getting squeezed out. And it's a similar story for the NASDAQ in here this morning. You can see again another, we sold off and rebounded on Friday, a gap higher overnight and a bullish push up through this 13-period exponential moving average. This is a really good indicator of trend change, and I think really opens up risk to the upside. And and then for the we already reversed the equivalent trend line a long time ago, but this just looks like a potential basing structure now with the break higher above the peak. So we hold on to the gap, settle above the gap in here today, and I think, and particularly if we settle above the highs from last week, this again all looks really bullish. So despite the strong moves we already had up higher in here, I think bargain hunters that have been sitting on the sideline for the last few weeks in here, the last 3 to 4 weeks, waiting for this market to bottom out and turn, could be rushing into the market today, particularly with this somewhat kind of not definite, but somewhat positive news on maybe more targeted tariffs going forward. So all of that adding up to a more bullish tone. So we've already had a significant moves higher today. It doesn't mean we can't go higher still going into today. All right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. Take care, stay safe, and I'll be back with you tomorrow with another Bull versus Bear webinar. Bye.